Hey everybody, welcome back to the channel. We have some news to talk about when it comes to Apple and Tesla stock. We're not going to waste any time going right into it. Apple is now being shorted far heavierly, if that's a word, more heavier, than Tesla. Apple is unseated Tesla as the most shorted US stock after Elon Musk's EV company held the title for 864 days. It is actually incredible to realize that Tesla has had a massive surge in just, being Tesla. We're going to look at the stock price in a little bit. It's at $305. It is rising in a world in which our economy and interest rates are also rising, which means the economy is tanking. The S&P is falling. Tesla's going up. Certain other stocks like Meta are going down while Tesla's going up. Tesla is being resilient to what's going on in the macro level conditions. But Apple has finally unseated Tesla as the most shorted US stock. So Apple's short interest in Apple stock is about 18.4 billion compared to 17.4 billion in Tesla stock. Kind of the same, but finally Apple's kind of taking over, and I want to get into a little bit about why this is happening. So around 113 million Apple shares were sold short as of Wednesday, representing 0.7% of the iPhone maker's publicly available shares. I think they have like 16 billion shares outstanding. Meanwhile, there were 57 million Tesla shares sold short, making up about 2.2% of the automaker's float, because Tesla has a smaller float than Apple. Short interest in Tesla has been volatile since 2020, climbing as high as 51 billion and dropping as low as 6.1 billion, 6.5. Obviously, when Tesla started doing its massive run-up in 2020, more people thought that the valuation was unsustainable, and Tesla has proved them wrong, now being a $1 trillion company, or $950 billion company. Meanwhile, Apple's short interest has ranged between 8 billion and 20 billion over the same time period. Now, remember that when you're shorting a stock, you're essentially betting that it's going to go down. So you are taking a speculative bet that if this stock price goes down, I make more money. So you are more bearish against the company. Apple short sellers are effectively betting against Warren Buffett, just like if you're a short seller on Tesla, you're betting against Elon Musk, whose Berkshire Hathaway conglomerate now owns 140 billion, or a 5.6% stake in the technology titan. Warren Buffett's firm bought Apple in around 2016, and in the early interviews, Warren Buffett said he miscalculated Apple as a tech company, which Warren Buffett does not like investing in because he says he doesn't understand those companies, and not a consumer company, which is obviously Apple's a tech company, but they sell a consumer product, and at the end of the day, it's one of the most phenomenal consumer products on the planet. They may be aligned with Michael Burry, those are the short sellers, whose bearish put options on Apple stock in the first quarter of this year. Apple is $8 away from, or about $14 away from becoming a $3 trillion company, which we'll talk about in a second, which I think is also giving a little bit of fire to the bears, who just don't think that valuation is reasonable. Tesla remains a popular target for short sellers as the stock has soared tenfold since the start of 2020. The company's market cap is at 948 billion, an astounding 18 times its revenues and nearly 170 times its net income last year, which is why short sellers think that it is overvalued. So if we go to our charts on Webull here, Tesla sits at $306. The S&P went from 430 down to 403. We see Adobe down to 308. They acquired a company for $20 billion today, down 16%. Tesla is remaining strong. Elon Musk recently tweeted the other day that he thinks deflation is going to be coming because he thinks the prices for commodities and sort of rare minerals and the things that go into the supply chain and logistics of Teslas are coming down. And Kathy Wood agrees with him. A lot of things are coming down. And as a result of those coming down, the Fed would risk deflation by raising interest rates and being more hawkish. So if we go to Apple, which just announced a suite of new products, including a $800 watch that a lot of people are going to buy for some reason, and a bunch of new iPhone 14s that haven't really changed that much from this iPhone 8. I mean, there's nothing that crazy about it. Its stock is at 153. Now, Apple flirted with being a $3 trillion company at one point. I think they got there for like a day, and then they came back down. The fundamental question I have when I'm evaluating something like an Apple or a Tesla is long-term vision. I think Apple's next S-curve, their growth curve, the curve that's going to be the thing that gets them to be a $3 trillion company to a $6 trillion company, is going to have to be a new product category, just like we had the iPad, just like we had the iPhone. It's either going to be a car, which is probably a good 8-10 years from now, or, and I don't think they're beating Tesla at that competition if they go the car route, or it's going to be something like a headset. I'm not bullish on the headset because I don't think people care that much about staying inside of some metaverse. I don't like that for Facebook's business at all. I like their advertising business, not the headset business. So you kind of wonder, it's like, okay, if the metaverse is not a thing and the car is far away, and if you do a car, it's going to be incredibly competitive, then what's that next source of growth for Apple? And it's likely going to be their services business. Apple has completely gutted. They've had this master plan for the past 2 years of destroying all of their apps that are built on top of the App Store's advertising businesses in the name of privacy, and they have unleashed their own ad network where they're going to be putting ads in the Stocks app, they're going to be putting ads in the News apps, in the Maps apps. They're already building their own independent ad network on the App Store. So there is a lot of growth for Apple in the context of them being able to actually build out an advertising infrastructure. I don't know if it's enough growth to get them from a $3 trillion company to a $6 trillion company, but I would understand why the market is bearish against a company that, yes, has put up $84 billion last year or last quarter. Yes, they're at a 7 times price to sale. Like, yes, they're a phenomenally innovative and technologically advanced company, but how much more room do they have to grow in the broader scheme of things, given what we're seeing with the market cap and with also the products that they're coming out? Whereas you have Tesla, you know, you've got everything from full self-driving to complete expansion. I mean, they're barely selling a couple million cars a year, if that. I might have that number wrong. So like the ability for them to take absolute market share over the exponentially growing transition from ICE vehicles to EV vehicles, it makes a lot of sense, even if people say Tesla is overvalued, for you to understand where more growth is coming from. Whereas for Apple, where more growth is coming from, I think it's a little bit different, which is why I think there is some logic to why people would want to go short on a company like Apple over a company like Tesla. I think the fundamental question here over the next 12 months is going to be, is Apple's products, or are Apple's products and their product innovation strong enough for the consumer to feel that they need to upgrade to the iPhone 14? I probably won't be. I mean, maybe if I get a good deal by trading in my old iPhone, but if it's $500-600, it's just not worth really upgrading. If I ever have 30-40 grand, a Tesla would be the first car I get over any other type of car. And I think a lot of people feel like that. And if Tesla can figure out how to build like a $25,000 version with full self-driving, maybe that's 5-6 years from now. If these Cybertrucks have 40-50% profit margins that is being rumored and talked about, then Tesla is a company you probably don't want to short in the context of Apple. But the one caveat here is if the macro economy collapses. Right now we're at 390 on the S&P, down 4% over the past week. Dow Jones lost 1,600 points this week. If we go to new lows in 2022 and interest rates and inflation is bad, inflation not coming down, interest rates having to go up, both of these stocks are getting demolished. Every stock on the stock market. Apple's not going to be able to remain a $2.8 trillion company. Tesla is not going to be able to remain a $950 billion company because the macro economy is going to head them down, which is why Elon Musk is saying, hey, deflation is likely versus inflation, so don't raise these interest rates and crash my stock. We're ultimately going to see what happens. Do you have Tesla? Do you have Apple? Do you think it's right to be short on Apple or short on Tesla? Or here's the final question. Which one would you short if you had to? Which one would you go long if you had to? Thanks so much for listening and watching. I'll see you in the next one.